The long-term rental loan has been the hottest loan program for the private mortgage industry in 2021. While private mortgages are mostly used for short-term investment needs, several private lending companies now offer loan terms up to 30 years for residential rental properties. It's also known as DSCR financing, since the debt service coverage ratio is the primary qualification. The private lending companies offering these fixed-rate loans have fueled an explosion of rental home investing over the past 2 years, making it easier for investors to acquire or refinance single-family homes, condos, and 2 to 4 unit rental properties. While attending the IMN Single Family Rental Conference in December 2021, I interviewed Jeff Tesch, CEO of RCN Capital, to get more insights about how the interest rates for these rental loans are determined and what the typical rates are. RCN is one of the largest private lending companies in the country and one of the top loan originators of long-term rental loans. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct private and hard money lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. Jeff, so your company was one of the first private lending companies in our space to start offering the long-term 30-year rental product, and there's been a lot of changes to these programs over the last few years. But for anyone who's looking to acquire rental properties or refinance their properties, could you tell us about how it works in terms of pricing? What determines the interest rate, and what are all the different factors that determine it?
Sure. So the first thing an investor really needs to think about is, what are my goals? Am I buying this house to hold for a few years and sell? Am I buying it to build portfolios? Am I buying it to create what I like to call generational wealth? Meaning I'm going to put tenants in for the long term, and eventually these properties will be passed down to my heirs. Most investors do have that long-term strategy. So first thing they need to think about is, how can I lock in what is the most incredibly low rates that we're seeing today, right? Like, how can I do that? So how's that pricing going to work? How's the leverage going to work? Most single family rentals today are an asset-based driven model, meaning we're not really concerned with what the customer's financial picture looks like outside of their credit score and how that property is going to service the debt. That's the key there, Rocky. How is that property going to service the debt? Most properties, we like to see a 1.25 debt service coverage ratio. That's an acronym that you hear all the time in the business, DSCR, right?
Yep.
So if that property has a 1.25, meaning it rents out for, let's just use round numbers, $1,250 a month, right? If it rents out for that, but your expenses are only $1,000 a month, what are those expenses? Insurance, your cost of debt, and then of course any property, standard maintenance costs. Then you generally are going to have a property that's going to be easily financeable.
Okay. But in terms of the rates at this time in late 2021, what are the general rates for these long-term rental loans?
Sure.
As far as a minimum and a maximum.
Yep. So the rates today are for a 30-year, and you buy the rate down a little bit with points, and it depends on the geographic region. But right now, we've got debt as low as 3.75 locked in for a 30-year period. I mean, it's incredible. Typically, commercial loans are usually a little more expensive than residential, and today we're trading very near what an owner-occupied property would be. It goes back to what I was saying about creating generational wealth, right? If you can lock in these incredibly low rates, 3.75 for 30 years, it's a home run like we've never seen before.
Sure. And what would be the high side of the spectrum? Does it go up to 5%?
Yeah, 3.75 up to 5. And how do you figure that out? Once again, it's debt service coverage ratio, credit score of the guarantor, any sort of mitigating circumstances with the property that may change that. So, yeah.
Also the geographic area. So let's say it's in a suburban area versus urban or different markets around the country?
That doesn't
matter?
really play into effect other than how you're going to calculate the DSCR.
Okay.
So we're not going to change the rates, whether it's urban or suburban, ex-urban, rural is something that we don't do in general, but that really wouldn't affect it.
So for any investor out there who's really picky about the rate, or they're trying to get the lowest interest rate, how do they navigate that? Is it really something even possible? Does it? Is it even worth their time trying to figure out how to get a 1/8 lower rate?
Right.
What's your take
So
on that?
let's look big picture, right? What's going on in the economy today? We have inflation. We have inflation like I haven't seen in my lifetime. I've never experienced this kind of inflation before, as have our customers, right? Trouble sourcing materials to do rehabs, all of these problems. And what's causing that inflation is any number of things, which is irrelevant to what we're talking about. But what's going to happen is the rates are going to go up to try and dampen that inflation. The Fed has made it very clear the low-hanging fruit is done, right? So the investors today really need to think, am I really going to hold out for that last 1/8 of a point because the rates might trade lower? I think in the investor's mind, it makes sense to say, what are my goals with my portfolio? What am I trying to do? And lock in these rates today. It's a huge mistake to wait.
But even if it's not just waiting for the rate, it's maybe, let's say in 2022 they want to acquire property, they don't really have much control over it. It's always going to be in this certain range of whatever based on the Fed rate.
Right.
If interest rates increase with the private lending 30-year rental loans, they're going to be somewhere in that range. It's just there's not much they can do to they could buy down to a certain point, right?
And to your point, right, locking it in, you can only control so much. You can control what you're paying for the property. You can control if you're going to put any rehab into it before you rent it out. After that, you got to lock in today's rates. Waiting is a mistake. Even if you're going to lower your rate by 1/8 or 1/4, maybe 2022, did you not achieve your goal of buying a property and adding to your portfolio? And that's what investors really need to think about. What are my overall goals in building my portfolio? And the tool of finance is just one aspect of it. Waiting is a mistake.
Okay, great. Thanks for all that insight.
Sure.
If any investor out there has a need for a 30-year rental loan, reach out to RCN Capital. They're one of the best in the industry, and hopefully they can help you out.
Thanks so much,
Cool.
Rocky.
All right. Thanks for your time, Jeff.
My pleasure.
Appreciate it.
Unlike short-term private mortgages, long-term rental loan rates move similarly to consumer mortgages since the majority of them are sold to the secondary market and securitized. While the interest rates for DSCR rental loans provided by RCN and other lenders range from 3.75% to 5% at the time of this recording in late 2021, many people in the private lending industry expect the Federal Reserve to increase the Fed funds rate in early 2022, which will cause rental loan rates to increase, making it slightly harder to obtain rental loans since the property's cash flow will be reduced due to the higher financing costs. Once there's a significant change in interest rates for long-term rental loans, I'll make another video to keep you updated. If you're seeking long-term financing for a residential rental property, use our website privatelenderlink.com as a resource. There's no fee to search, and you'll find several reputable private lending companies listed. Click the link in the description to get to the long-term rental lenders page and enter a state or a major metro area. Click on each lender's profile to learn more about their rental loan program, then click the green contact button to find their phone number and a form to send an email. Please remind each company that you found them on privatelenderlink.com. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private and hard money lending. Thank you for watching, and see you in the next video.